We all know Google, right? It's like the friendly neighborhood tech giant. But have you ever wondered what really makes it tick? Like, what's the secret sauce behind its massive success? Well, today we're going behind the scenes, pulling back the curtain to reveal the untold story of Google's impressive revenue and jaw-dropping profits. Get ready because we're about to dive deep into the numbers that define Google's dominance and what they mean for you as an investor. Tech titans don't get that way by accident. There's always a story, a journey that started somewhere with someone. And in the case of Google, the story goes back to 1998. Back then, internet was still figuring itself out, and two Stanford PhD students, Larry Page and Sergey Brin, had a crazy idea. They wanted to organize the world's information and make it universally accessible and useful. You may have heard of their project called Google. But what truly set Google apart wasn't just the idea itself, it was the way they did things. I mean, everyone was indexing the internet back then. But Page and Brin came up with something revolutionary, the PageRank algorithm. Think of it as the magic behind how Google ranks websites based on relevance. Back then, relevance was hard to pin down. Most search engines were just keyword matchmakers. But Page and Brin saw something different. They realized that the number and quality of links pointing to a website could indicate its importance. It was a bold, unconventional idea, but boy did it work. And before you knew it, Google went from a garage operation to a household name. But being a household name is one thing. Being a titan of tech, finance, and culture, well, that's another league altogether. It's a testament to their genius and a blueprint for anyone who wants to play in the big leagues. Now, let's talk numbers. Because behind that catchy jingle lies a financial engine firing on all cylinders. In the first quarter of 2024, Google raked in an impressive $74.5 billion in revenue. To put that into perspective, this revenue figure is nothing short of spectacular. It showcases that people and businesses are placing immense value on Google's offerings. Whether it's through search, YouTube, cloud computing, or other ventures, people are actively engaging with Google products. When we break down these numbers, we discover that search advertising alone brought in approximately $45 billion. This highlights the enduring strength of traditional online advertising. Businesses continue to rely on search advertising as a way to connect with their target audience effectively. YouTube ads alone generated a whopping $8.8 billion, demonstrating the platform's significant contribution to Google's revenue. As video content continues to grow in popularity, YouTube remains a prime location for advertisers to reach their audience. Google's cloud division pulled in $7.7 billion, showcasing the increasing adoption of cloud-based services in various industries. This segment's growth indicates the growing importance of cloud computing in today's digital landscape. The remaining revenue is spread across a variety of sources, including licensing, hardware, and other ventures that contribute to Google's diverse income streams. A closer look at the financials reveals some staggering numbers. Google's gross margin stands at a robust 31.12%, signifying that the company is adept at managing its costs and maximizing profitability. Its operating margin is equally impressive at 32.43%. Such high margins demonstrate operational efficiency and a strong competitive position within the industry. Now let's talk about what's fueling this financial success. Google's revenue growth is nothing short of remarkable. In fact, the company has achieved a year-over-year growth of 13.8% in Q2 2025. This growth trajectory showcases the company's ability to expand its market share and cater to the evolving needs of its users. Such growth is often fueled by factors such as increased usage of existing products, expansion into new markets, and strategic acquisitions. Speaking of acquisitions, Google is known for its knack for spotting promising startups and integrating them into its ecosystem. For instance, the acquisition of YouTube has proven to be a goldmine, transforming the way we consume and interact with content. Similarly, the purchase of DoubleClick allowed Google to dominate the online advertising space. And the acquisition of Android opened doors to the vast mobile market. Moreover, Google's foray into cloud computing has been nothing short of strategic. By investing heavily in infrastructure, they've positioned themselves as a major player in the cloud market, attracting both individual users and large corporations. This diversification has ensured that Google isn't solely reliant on advertising for revenue. thus mitigating risks and fostering stability. But what sets Google apart isn't just its revenue. It's also about how they manage to keep a hefty chunk of it. Profitability is where Google truly shines. With a net profit margin of 23.78%, the company has demonstrated its ability to generate substantial profits while delivering top-notch services. This signifies not just financial success, but also efficient cost management and a keen understanding of market dynamics. Let's delve deeper into what propels Google's profitability. Firstly, the sheer scale of Google's operations contributes significantly to its profitability. With billions of users worldwide, Google enjoys economies of scale that many competitors can only dream of. This allows them to leverage their massive user base to negotiate favorable deals with advertisers. Secondly, Google's diversified revenue streams play a pivotal role. While advertising remains a substantial source of revenue, the company has successfully expanded into areas such as cloud computing, hardware sales, and software licensing. This diversification ensures that Google isn't overly reliant on any single source of income. It's providing stability and resilience during economic fluctuations. Lastly, Google's continuous innovation helps maintain its profitability. By investing heavily in research and development, Google ensures that it stays at the forefront of technology. This commitment to innovation enables them to introduce new features, improve existing ones, and create entirely new revenue streams. So there you have it. Google's financial prowess is a blend of massive scale, smart diversification, and relentless innovation. Now let's shift our focus to another vital aspect of Google's financial health: its debt position. Picture this. Google is sitting on a mountain of cash, boasting a total cash equivalents and marketable securities of over $150 billion. On the flip side, the company's total debt is a mere fraction of that, at around $16 billion. This stark contrast between its cash reserves and debt paints a clear picture of financial stability. Google finds itself in a prime position with a debt-to-equity ratio of 0.11, signaling that it's virtually debt-free. This financial flexibility allows Google to navigate through economic uncertainties without the burden of substantial interest payments or the risk of default. Instead, it provides the company with the freedom to invest in growth opportunities, acquire promising businesses, or return value to shareholders. This low debt position is a testament to Google, its prudent financial management, and its ability to generate substantial cash flow from operations, enabling it to fund its activities without resorting to excessive borrowing. Moving on, let's dissect the magic behind Google's earning power. Over the past few years, the company has consistently delivered impressive earnings per share growth. In fact, in the second quarter of 2025, Google achieved an EPS growth of 19.4%, demonstrating a remarkable ability to increase its earnings at a substantial rate. This achievement reflects Google's capacity to boost profitability without diluting shareholders' interests, showcasing a favorable financial trend for the company. What drives this impressive earnings growth? One key factor is Google's focus on revenue diversification. By expanding into sectors such as cloud computing, hardware, and subscription services, Google has reduced its reliance on a single income source, thereby stabilizing its earnings and mitigating risks. Additionally, the company's efficient cost management plays a crucial role in its profitability. Through strategic resource allocation and operational streamlining, Google ensures that its expenses remain in check, contributing to improved earnings. Furthermore, Google's heavy investments in research and development have yielded substantial returns. By staying at the forefront of technological advancements, Google can introduce innovative products and services that enhance user experiences and drive revenue growth, ultimately boosting earnings. And finally, let's address the elephant in the room: Google's valuation. The company's price-to-earnings ratio, or PE, stands at approximately 22.84. While this might seem relatively high compared to some industry peers, it's essential to consider Google's growth prospects when evaluating its valuation. The PE ratio reflects the market's confidence in the company's future earnings potential. Given that Google is expected to continue its robust growth trajectory, its forward PE ratio, which factors in projected earnings, is approximately 20.42, suggesting that the market is anticipating continued strong performance. In conclusion, Google's financial performance is nothing short of phenomenal. Its impressive revenue, sustainable profitability, low debt, and reasonable valuation metrics underscore the company's strength and potential for growth. However, as with any investment, it's crucial to conduct thorough research. Diversify your portfolio and consider seeking professional advice before making any investment decisions. Before we go, remember to subscribe. I would really appreciate it. See you in the next video.